Trades today. Well, straight after the wealth creation ideas for the day, and joining in now on the show is Dilip Bhat, Joint Managing Director, Prabhudas Lilladher on the show. Great to have you with us, Dilip. Let's discuss the first idea in great detail then and talk a little bit about an ACC first up. And cement as a space seems to be garnering quite a bit of attention, but you still do have those lingering fundamental problems which plague the sector. You'd still go with a large cap name like an ACC?
Sure. I think ACC possibly is the best placed amongst the frontline cement companies to capture the expansion in the margins, largely because it has a good capacities in South. Not to forget, it has capacities all over India, and that's why the operating profit per ton is one of the lowest as compared to any of the frontline companies. Now, this holds a good promise that the expansion of margins or the operating profit per ton can go up very significantly. And more important also that they have commissioned quite a few new capacities in the last 1 or 2 years, the full impact of which will come maybe in the next 2 years. So what we see is that in the coming years, we will see that possibly there will be higher volume output, higher turnover and higher operating profit and higher margins. So this will actually bring about a good growth in the bottom line, and more important, I think the ROEs will go up quite significantly, and they will also generate a reasonable amount of free cash. And cement as a sector, I think, still remains pretty good because they are a lot more immune to the international ups and downs, and they are not so much influenced by the international prices. So I think ACC still, as a frontline company and as an MNC, I think it still is a good bet to create a good amount of wealth over a next medium to long term.
Dilip, the other one, of course, is more predictable. Lupin, you like that one. But the point is, after the phenomenal returns that one has already seen year to date in the stock, fundamentals of the company all intact, but it is an expensive stock. Would you still recommend investors to go and buy this one?
Well, I think what you say is absolutely right, that Lupin has really delivered in a big way. But what we think is that over the next couple of years, perhaps this story will be sustainable, and what is more important is that perhaps the growth rate will continue to be exceedingly good. Now, our understanding of the entire situation in the market is that any stock which really gives a sustainable growth, it consistently leads to the expansion of the PE, and which is what we are also thinking is going to happen in terms for Lupin. I think there are a good set of products which are due for permission. I think we will be positively surprised in terms of the margins which will continue to expand. And I think one of the reasons why probably it is a little capped of late is largely because of the FII restriction, which hopefully in the near future probably that restriction or that constraint also should be off. But more important, I think the company will continue to grow in excess of 25-30% in the top line, and the bottom line will certainly be more than the top line growth, and ROEs will consistently be about 30%, indicating that company is really faring very well on almost all the parameters. So I think even from the current level, despite the fact that I do concede that it has really gone up, but still it has got a tremendous scope for it to go up further on a sustainable basis.
Dilip, aside of ACC and Lupin, just for a 1-year time frame from this Diwali to the next, if you had to give our viewers a top Diwali dhamaka idea, which one is it going to be?
Again, you may say that it is one of those regular ones, but I think HDFC Bank should be bought from the current levels. I think though it is a really over-owned stock, but it has really underperformed as compared to the entire banking sector, and largely because of the cap on the FII. But I think all said and done, even if one were to take that into stride, I still think that HDFC Bank is very well positioned as a frontline stock to give at least 20 to 25% return from the current levels. And I think it's a very strong bet, whether it's a management, whether it's going to be NII growth, whether stability of asset or return or ROA. I think on all the fronts, probably it will fare exceedingly well and can surprise in terms of positive returns on the stock market.
Okay, Dilip, so sticking with large cap quality stocks, that's Lupin, ACC and HDFC Bank. Great having you as always with us on the show. But meantime, the market's laying fairly low. It's looking rather listless. So let's get in a view on how the derivatives activity is shaping up. Darshan joins in for just that. Darshan.
See, the market's looking weak currently. Over the past 15 minutes, we've seen